Hello, students. Good morning, good afternoon, good evening, depending on where you are following from. So, we are going to start another video now, and hopefully, like the previous ones that we've had, it's going to be quite amazing for you. I can't wait to hear of how it all went with you and all that. So, in our last video, we dealt with basic understanding of risk management and what I consider as the first and arguably the best strategy to risk management. We defined what risk is and we defined what loss is, and we actually got ourselves to understand that risk and loss do not mean the same thing, and that is very, very important. And we said that risk management is that thing that keeps you long in the game, because you must understand that when it comes to the forex market, it's a game of right and wrong. However, when you're wrong, you lose your money. When you are right, there are many things that can happen. When you are right, it does not automatically translate into when you're right, you make money. No. Okay, what do I mean by when you are right? I would say when you are right because you took a trade that between your entry and SL, that was exactly where price reversed from and went as far as where you intended to take profit. However, the fact that you were right does not mean that you will make money on that trade. How? It's very possible that when the trade triggered, spread took you out, even though price did not get to your SL. Spread took you out and trade turned back and went to hit TP. It's possible that after the price triggers, we just had an accumulation for several hours. Price was just playing at your entry, and at some point you told yourself, well, it's best to just cut this trade short. If it's going to move the way I expect it, it should have done something by now. And then you decide to close the trade. Not long after you closed the trade, this price actually started moving and went as far as hitting your TP and way beyond. You were right. You took a right trade. You got where it was going to start from. You knew it was going to get to TP. You placed SL where price never touched, but unfortunately, you still missed out on that trade. Again, price could go as far as 1:2, and you are the kind of guy that targets 1 to 3, and then price decides to retrace. You choose to break even, and it comes back, hits you out at break even, and then turns back. It goes to its TP. The point is, even on a trade where you are right, there are many things that can happen for you to still not make profit on that trade. Right? And of course, for a trade where you are wrong, 100%, you can be sure you have lost your money already. So this is a game where the possibility of losses, in the general sense of it, overwhelms the possibility of winning, or the probability of losing happens to overwhelm the probability of winning, that's making the money. So what that means is that you must trade from a perspective of a money manager, somebody who is your first priority is to protect your money. Of course, you don't want to get to the point of trying to protect your money such that you are not going to place trades. Actually, if you don't want to lose any money to the forex market, the best thing to do is don't even place any trade. However, if you are not placing any trade, then you cannot possibly make money, except you're a broker. And we're not talking about brokers here. We're talking about you as a trader. So as a trader, you must put something on the line if you're ever going to make any money. However, you must trade from the perspective of a sound risk manager. Before we get too far into this, let me tell you this. If you have ever imagined what a professional trader looks like, let me tell you what they really look like. There was a time in my life that I thought being a professional trader, being very good at trading would mean that, I could wake up one morning, decide to open trading view and check through a few charts and I can just literally pick a good trade, and I can be assured that by the time I'm getting out of that trade, I'll be in money. Well, unfortunately, that is actually not what a profitable trader looks like. There is no trader out there who can assure you with 100% that if I get into the market today, I'm making money. Nobody. However, you can get good to the point that the probability that you're going to leave the market with money every single day is very high. How do you know that? Over the last 2, 3, 4, 5, 6, 7, 8, 9, 10, 12 months or more, your trading journal already shows that every single day you take trades, you always end up winning 2 out of 3, sometimes 3 out of 3, sometimes 1 out of 3, but that's fewer times. And even when you win just 1 out of 3, from the perspective of the risk management we did in the last class, you're in profit, right? I mean, you risked $50, you lost 2 trades, that's you lost $100. Your one win is a 1 to 3, that's 150. At the end of the day, you still have $50 profit left. So if over the weeks and months you have been able to consistently show from your trading journal, from your trading history, and of course from your equity and account balance, that I keep making money, that is when you can say that, yeah, I'm sure that, every week I leave the market in profit. It doesn't mean that it's going to still happen every week. There are going to be weeks when some market is just not respecting your strategy for that week, for some underlying fundamental reasons. And yeah, it happens. The point I'm trying to make to you is all of those do not make you less of a profitable, professional, and sound trader. Who really is a sound trader? A sound trader is that individual who has understood the nature of the market, which is largely uncertainty. I'm going to have to write that for you. A professional trader or a very good trader is that individual who has come to understand, very importantly, and accept, because it's not enough to just understand, the nature of the market, which is largely uncertainty. Very, very important. Is an individual who has come to understand. Okay, let's break it so that it's more readable. Who has come to understand and accept, very, very key, the nature of the market. And what is the nature of the market? Largely uncertainty. This is a statement you really, really, really want to hold on to. Because if you have a wrong expectation of what a professional trader looks like, you end up frustrating yourself. A professional trader is, more often than not, that individual who has come to understand and accept the nature of the market, which is largely uncertainty. And hence, they trade to stay safe and ahead of that uncertainty. And hence, trades in a way that is adapted to manage and maneuver the uncertainty to their best advantage. professional trader is first in safety and capital protection than in accuracy or profit accumulation. Okay, you really should take this. You should really take this down. Oh, sorry. This is a very, very key statement. The professional trader is first in safety and capital protection than in accuracy and profit accumulation. Very, very, very important. Now, the aim of this class, of course, is to get you to tune your expectation in trading. I personally discovered that the moment your expectation is wild, you get frustrated because you're not getting what you desire to have, which is what happens to every one of us generally in life. At any point where you do not get what you desire to have, which you think that you deserve, which you think you have actually worked for, you get devastated, you get angry, your psychology is battered. In the market, if your psychology ever gets battered, you are already on the wrong side. The market will continue to collect your money. So you must tune your expectation in the market. You must tune your expectation. What is your expectation when you come to the market to trade for the week? Stop desiring, God, let it just happen that I just take just 5 trades and all of them hit TP. Now, I am not saying that is impossible. I am saying that may be far from a reality. And you should just be realistic. Trading is not a place where you want to be utopian. Should I use that word? Trading is not a place where you want to be so abstract, where you want to, in quotes, claim positivity and faith. Now, I'm not saying you don't want to trade with faith. I'm not saying you don't want to trade with positivity. I'm saying let your faith and possibility be tuned to the reality of the Forex market, to what is obtainable. You must be comfortable with the fact that in trading nothing is certain. And that is the reason why, if any one of you ever watches the technical analysis videos and then you come back and say, okay sir, you have taught us that this, how can we know those trades that we do well, so that we'll just take those ones? The truth is, there's no way of knowing which trade will go well. If there was, I won't be taking any losses. Trading is uncertainty, and if you say you want to be a trader, you are saying you want to go to a place where nothing is certain. Whether you're going to make money or you're going to lose money at the end of the month is not certain. Nothing is certain. Strategy or no strategy, risk management or no strategy, or no risk management, nothing is certain. What we do with having a strategy, what we do with risk management and all of those things, is we stack the odds in our favor. We increase the likelihood, the propensity, the probability of success. None of them guarantees success. So let me tell you something that happened to me last week. Last week I took, I might have to refer to my trade history, but I think I took 4 or 5 trades. Funnily, my first trade was a very good trade. The trade was almost going to hit me out at SL. 1 pip, and it turned back. I went as far as way beyond, a little beyond my TP. However, how much did I make on that trade? I only made 1:2 or thereabouts. My TP was 1 to 3. What happened? I happened to open my MT5 just when the trade hits 1 to, I think 1:2.9. So instead of the trade going a little further to 1 to 3 to hit my TP, the moment it got there, it started turning back a little. And trust me, I must confess to you, I started feeling it somehow. And as a result of that, I just decided to close out of the trade. And that happened to be around 1:2. Not long after I closed out of the trade, the same trade turned back and started going back up. Hit where my TP was and a little beyond it. So I closed the trade that was supposed to give me 1 to 3. I closed it at 1 to 2. Okay, no problem. I took my next trade some days down the line of the week, and it was a day where there was news. I was hoping that, okay, maybe I would take advantage of the news, maybe I won't, but I'm going to play this very safe. Now, just 3 minutes before the news, I was up by 1:2. And I told myself, okay, should I take profit because this news is an high impact news? It can be disastrous. Do I take profit or I should just leave it? I mean, what if the news favors my direction? So I decided to leave it. Of course, when you're leaving it like that, you don't just leave it in that sense. I broke even. I took my SL to 1:1, if I'm not making a mistake, or 1:0.5. My break even is 1:0.5, and I know that's different from what most of you know as break even. Break even generally is you move your SL to your entry price, so that on that trade you can no longer lose any money if the market still happens to come back. But for me, when I want to break even, I put my SL at 1:0.5. Yeah, I don't see a reason why a trade should have done 1:2. It's my own style. It's my own trading rule. You may choose to break even at 1:1 if you like. You may choose to break even at entry. The moment my trade has done 1:1, I take my SL to entry. It's okay. Just have the rule and stick with it for many trades. Don't break it on any trade. So for me, I placed my SL there, and the news in 1 second dropped very, very crazily. I was on a long. And I'm sure you know high impact news don't respect SL to that extent. So instead of the trade taking me out at 1:0.5, it took me out at around 1:0.25, something like that. So imagine, I want to give you an example. A trade that was up by $1,000, which is 1 to 2, 500, 500, and I decided to break even at 250, ends up giving me only $100. Imagine a trade that was already as high as $1,000 in profit. These things happen. This is the market. You don't want to make your life full of regrets. And I took it was fine, because the truth is, okay, what if the news had gone in my favor? Like additional 30 or 40 pips in 1 second. That would have probably just blown my account up in profit. But yes, it's trading. You have said you are here to take risk. It's fine. So that happened. So what exactly am I telling you? At the end of the week, I think I had taken about 5 trades, and I ended up with less than 1 hour. Now trust me, that is one of my worst weeks. On a normal day with 5 trades and 2 wins, you and I already know the calculation. With 5 trades and 2 wins, you should be up by how many hours? 3 times 2 is 6, and then you remove 3. You should be up by 3 hours. So if you are risking $500 per trade, you should be up by 1,500. But it happens. In fact, it wasn't the case. I showed you one of the last recordings I did. Which day was that? That I took 2 trades that particular day. One of them was already in good profit, 1-1, and it turned back, went to hit SL, and I left it. The second one triggered into SL with a very crazy spike, and I was like, what's going on here? There's no news, and I'm seeing the impact of news here. So I just waited for it to get back to entry. I closed out, and the trade kept going up as high as 1:2.4 or something. The one that was going to hit SL, I left it to play out. The one that was going to give me profit, I happened to close out early. This is the reality of trading. I'm saying all of this because have your expectations tuned. Tune your expectation to the reality of trading. Now that you are just starting out, you may not be able to win more than one trade out of 4, 2 out of 5, 3 out of 5. It's very random. Very, very random. However, over the next 30 trades, 40 trades, 50 trades, 100 trades that you have taken, in which is going to take you months, of course, you realize that your strategy would have given you more trades, much money. But if you're thinking of, let me come to the market today and make money, I'm sorry, your expectation, there's a high tendency your expectation will be dashed, except of course you have been a trader who has been trading for a long time, you have been refining your strategy, you have been journaling, you have been getting better, and you have now gotten to a point where on an average you win like 1 out of every 3 trades or 2 out of every 3 trades. Else, your expectation will most likely be dashed. I need you to quickly tune your expectation to reality. If not, you'll be frustrated. Okay, so you guys need to hear this for a fact. I was trading a prop account, and you may not believe that I wasted many good trades. Many good trades that went in good profit as high as 1 to 5. Trust me, I will not take profit because I was targeting 1 to 7 as my TP. And the market will start reversing right in my presence. I won't do anything. Many of the time, these trades will go back and hit SL. A trade that has done 1 to 5. Now, I know that's very stupid, but everybody goes through phases. That was some times ago. Now, I'm telling you all of this so that you can learn from it and fix it in your own journey, alright? And sometimes I'll just break even at entry. Then I was doing break even at entry. Many of those trades will come back, hit me out at entry. A trade that has done 1 to 5, 1 to 4, 1 to 6. I have held a trade for 1 full week before. You know the way we trade. Within a day, you should have hit your TP. I have held 2 trades for 1 full week before. And I ended up with those trades breaking even. I'm sure you know that holding a trade for a week involves holding over the weekend, which means I'll pay swap. Still, the trade ended up hitting me out at SL. At entry. Because I wouldn't take 1 to 5 profits. I was targeting larger. Now, what I'm trying to let you see is this. I had taken several trades, many of which, no. I had very good trades that went in good profits, but I won't take profits. I will not take profits. Why? Because I was targeting more profit. Now, that is defined as greed in the Forex market. Well, in some sense, if you have tested your strategy to give you 1 to 7, there may not be a sensible reason to be closing trades at 1 to 5. It's all about what have you tested your strategy to always give. How well have you known your strategy, right? So unfortunately, that plagued me on that particular account. And as a result, I had many good trades that I didn't take profit. And of course, many trades that hit SL. So the SL began to overwhelm the profits. Do you know that in that state, I still successfully hit 50% of the prop challenge target in less than a month and a half. Even though I was wasting many profitable trades, right? I still did 50% of the target. Now, what I'm trying to help you see is this: tune your expectation to reality. You may not grow that account as much as you want in 1 month, in 2 months, in 3 months, but allow it to play out over a long time. I have to send a screenshot to my partner, Moses, where our mentor said in the group that after about 2.5 years or so, he has only been able to double his Forex trading account. Of course, his account is a very big account, a personal account of about $50,000 or more. By my calculation, the last time he talked about that account, it should be around $50,000. And right now, he's made many withdrawals, left additional profit. So maybe the account is over $100K now. I really do not know. But he said he has been able to now successfully double it after about 2 years. Now, the person I'm telling you about almost never hits SL. I mean, I remember a period where he said it categorically for 6 months. He did not hit one SL. Everything was TP, 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 break even, TP, TP, break even. Is that good? However, he did not double the account like that. Why? Of course, you make profit, you withdraw to take care of your life. You withdraw some profit, you keep trading again. But it doesn't happen overnight. My main focus here is to tell you, tune your expectation to reality. Tune it early enough. If you can tune your expectation to reality, and of course one of the reality of the forex market is that you will take losses. And you must understand that when you take loss, it does not reduce you. Is the market just telling you, no, try again, you're wrong this time around? Because there will be a time that you're right. And the good thing is, if you can do a good risk to reward ratio, 1 to 3, or you can do 1 to 4, if you have backtested well with your pair, the time of the day that you trade, how exactly you apply this trading, and you have seen that reliably gives you like 1 to 4 to 1 to 5, and you can stick to 1 to 4, then you can lose 3 trades. Just one win will cover everything and still give you profit again over it. For us, we try to just stick with 1 to 3. Now, trust me, sometimes I hold trades for as high as 1 to 16, 1 to 12. I mean, some of you have seen it. But minimum, I do 1 to 3. With that, even if I lose 1 trade today, 2 trades today, my next trade, if I can win, has covered the 2 losses and put me back in profit. That's the beauty of trading. So I'm trying to help you understand that risk management is in the psychology, what you expect from trading, and in how much you are risking and how much you are winning. So when I was telling you about the prop account in question, right, after about 1.5 months that I have done 50% target, someone started feeling like, how will I be trading one prop account? 1.5 months, I have not finished it. What kind of rubbish is that? My expectation was beginning to shift from reality to simple should I call it fatuation? Fatuation is probably a foul word, but my expectation was beginning to shift from reality to stupid desires, to fantasy. Somehow I felt like, is it not me? Now, it doesn't mean that I'm not good enough. However, trading is not a place where you can say, I want to decide how much I will make every week. You may not be able to. The market chooses for you. You don't know which trade will hit TP, you don't know which one will hit SL. Now, what I'm trying to let you know is, if you can achieve 50% of a prop target in about 1 month or 1.5 months, despite the fact that I remember by myself, I wasted many good trades. Trust me, I know now that you should you should be grateful for that. Wow, you did well. Instead, I started feeling like I wasn't doing well. And those things will put unnecessary pressure on you. Trading is such that if your mind is not in the right state, don't worry. As harmless as the market is, you will continue to lose. And it will look as if the market knows what is happening to you. No, the market actually is like a mirror. It only shows you the real state of your mind. So if you are in a balanced state psychologically, the kind of psychological state that is needed to win the market, somehow every trade just work out. If you are in a wrong psychological state, the kind of state that doesn't work in the market, you just realize that you are losing. It doesn't matter which trade you take, counter trend or trend, whether it's your favorite pair or not, you just realize you are losing. Okay, so I said all of that to say this, guys. Tune your expectation in the market. I intended going to the other 2 ways of risk management, but somehow I find myself just doing more of trading psychology training for you right now, which is very important. So let me go back to something I said towards the end of the last video, guys. Very, very importantly, I discovered that you will largely be frustrated if you're trading a small account. I recommend you trade a small account to prove to yourself that you can do this. After which, please get a good prop account. So, if you have started learning the strategy and you really want to get into, I've told you the strategy, the technical analysis is just about 10 to 20%. The real thing is in actual trading. You want to feel the pressure of the market. You want to see what actually happens. That a good trade, a trade that you were right, still ends up in a loss. Go face it. First with demo trading, do that for about a month. Do it judiciously. Don't just place a trade and leave it there because it's a demo account. I'm not losing any money. That is not, you're not going to be able to trade a real account that way. So don't even trade demo like that. Trade the demo like real. I did that very well when I started out. After that, I would personally advise you to try and fund a $20 account. Try and fund a $30, $40, $50 account. I think 20 should be the minimum, so that you can take every trade, just risk $1. Risk say 3% or between 1 to 5%, anything between 1 to 5% is fine. Risk that on every trade. Do that for another 1 or 2 months. See if this thing actually works, this risk management thing. I'm risking $1 to target $3 on every trade. If you want to hit SL, let it hit SL. If it will go in your profit, let it go and hit TP. Don't interfere. Do not interfere. Now, the moment you can establish over 1 week, 2 weeks, 3 weeks, 1 month, 2 months, that you are able to win 3/10. Now, 3/10 does not have to be 10 trades you won 3. Any fraction in that, you are able to win 30% of the number of trades you took. So if you took 5 trades, what if 30% of 5? The moment you are able to win 30 to 40% of your trades, TP, 30 to 40%, it's a good, you have already done it on a live account. It's a good time to just carry that same money and go and buy a prop account. Because with a prop account, the only difference now is a little, in fact, much bigger capital. So instead of finishing with $5 profit, despite the fact that you did very well for the month, of course, because your account is very small, on your $20 account, you are risking $1 per trade. At the end of the day, you won 4 trades, you lost 6. What do you end up with? 3 times 4, 12. And then 12 minus 6, you end up with $6. You have grown your $20 from $20 to 26 or thereabouts. I hope my calculation is right. The point is, the $6 cannot foot your bills. You will not really feel like, you did anything great. Meanwhile, if you had done that same thing but with a bigger account, that's big profit already. Big profit already. So what's the point? That is a good time to just get a proper account. And when you get a proper account, let me tell you this early enough. When you want to start trading a proper account, please have it at the back of your mind. This might take time before I can complete it. It can take 2, 3 months, 4. I hope it doesn't have to take that much, although there are some ways you can do it that it will not have to take that much. But like I told you, nothing is 100% certain in the Forex market. We can do things, we can put things in place to increase the possibility of something happen. Nothing makes it certain. Have it at the back of your mind, this might take long. Very, very important. And you know what? The moment you can finish your first prop challenge and become a fair live trader, funded trader, and you can get your first payout, to a very large extent, Forex has become something you are able to make a whole lot from. Because all it takes now, keep doing the same thing that you have discovered that works. Psychology and trading style and trade management. Keep doing it. After a few months, buy a bigger account. Trade the challenge, pass it. After some time, start making withdrawal again. Give yourself a little more time, buy a bigger account. Very simple. Very, very simple. However, it's a difficult process. So this is trading psychology, and the essence is to tell you what? Tune your expectation to reality. I've told you, if you cannot tune your expectation to reality, even when you're doing good, you will think that you are failing. And when you think that you are not doing well, you start put very big pressure. You can never trade the financial market with pressure and succeed. So I'm going to say this for the last time, guys. Tune your expectation to reality. The forex market is not a wishful place. The forex market is a very, very realistic place. It's not a place you come with your birthday wish, like birthday wish. You want to pray a wish to Santa Claus. Santa Claus is gonna bring you a gift. This is not forex market. No, no. Forex market is very realistic. Yeah. All right. I'm going to close this recording now, and see you in the next video. Okay.